Hello, everyone. Welcome in. If this is your first webinar in this series, welcome. If not, welcome back. My name is Alana O'Connell. I'm the marketing manager here at Holistiplan, and I'm so glad that you're joining us for part 2 of this 4-part series that we're having with Emily called Cooking Up a Streamlined Year-End Tax Planning Process. A few housekeeping notes before we begin. We are recording today's session, and we will share the replay with you later this week. As always, feel free to drop your questions in that Q&A throughout. We'll keep an eye on those and address them as we go. I'm thrilled to welcome back Emily Rassam. Emily is a partner and senior financial planner at Archer Investment Management, where she serves over 200 households nationwide. With 18 years of experience, she's passionate about helping folks make confident financial decisions that balance today's priorities with tomorrow's goals. She has been recognized as an Investopedia Top 100 financial advisor, a Forbes Top Women Advisor, and an Investment News 40 Under 40 Rising Star. And she serves as a thought leader and speaker for us here at Holistiplan, helping advisors elevate their tax and estate planning conversations. With that, let's dive in. Emily, I'll hand it off to you.
Yeah, thanks, Alana. So excited you're joining me here today again. The first session, I did upload my slide deck for today, and I'll pull it up as well, but I did put a link in there to the first session. Some of you don't know this, but there is a YouTube channel for Holistiplan where all of the prior sessions live. So all of the recordings live out on the YouTube channel for Holistiplan. Go follow them. And there is an Emily Rassam playlist. So you can kind of check out some of the prior sessions that I've done. Sometimes I will reference back to sessions that I've done previously. So the first one in this 4-part series, mise en place, was really kind of getting organized and getting to this phase here. So how do you kind of get organized? How do you talk to clients about getting to this step here? Getting ready to get into the scenario analysis, which I'm going to spend most of my time in today. And really being able to then craft this year-end tax planning process and kind of bring that impact to clients. So I'm going to share, I just have a couple slides for today. I'm going to slideshow mode here. So session 2, so we're going to cook a little bit today. Where did we come up with this idea of like mise en place and cooking? What you'll see in the scenario analysis is that there are recipes in there. I'm like, oh, let's make this whole like a cooking theme. But ultimately, mise en place was getting those ingredients together. Today, we're going to kind of put that together into that scenario analysis. What I'll tell you is kind of my journey as an advisor with tax planning has changed tremendously. I'm going on 19 years in this industry. I think that I originally started out by saying, okay, tax planning questions, ask your CPA. And you throw that ball over the fence enough and realize, oh, that's not really happening. And it's really not the fault of the CPA. They don't have all of the information. So in order to do tax planning, I think that you need to be a financial planner and have all of that data and understand the client's goals and preferences and spending and how all that fits together. So CPAs can do a great job of doing some of the kind of current year work or prior year work of filing the returns. But as planners, as a lot of you are on this call, it's really thinking about directionally moving forward and in the context of how does this tax year fit into all the others? And how do I help this client through their scenario? And we're often in a position, we've had more conversations with clients. We often understand them and know more about their data. So it's a way for us to kind of look objectively at their tax year and help support them. And I felt like CPAs were kind of covering that topic and then realized they're not. And, you start to learn about these different strategies. Like, how can I help my clients make sure they're withholding enough income or withholding enough taxes throughout the year, paying enough taxes throughout the year, so they're not upset. We've all had that client say on April 15th, like, I had no idea I had to write a check for $30,000 this year. And so you want to get better as a planner, better as an advisor, saying, how do I help prevent that like sting that happens when that type of event occurs? Or being able to more thoughtfully say, okay, I know that a Roth conversion might be a good idea, or, contributing Roth dollars versus pre-tax, or evaluating that, or evaluating things like itemized deduction bunching or charitable contribution. being able to now go into some different tools where we're able to actually help our clients see what the impact of those decisions are going to look like and how they're going to play out. I feel like the Holistiplan tools have really given me that confidence to sit down and have those meetings with clients and really dig a lot more into the data and be a lot more helpful to them. So I want to kind of show you how I think when I get into the tool. I'm an advisor. 95% of my time I'm meeting with clients and handling normal kind of financial planning and investment management client concerns to the end client user. But I like to come into these sessions because I remember what it was like to not necessarily have that confidence or the tools to kind of go into these year-end tax planning scenarios, and being able to kind of just share a little bit about how I work day to day in this tool. So with that, the caveat, I am not the absolute expert on scenario analysis or Holistiplan tools, but there is a fantastic bank of people, support people at Holistiplan that can kind of help you with like the really nuanced things. And we're going to do another session in part 3. We're calling it the secret sauce, which I'm going to take you into even more case studies in scenario analysis. So some kind of real client anonymized information where I'll show you some of the different techniques. If during this session today, you have really specific questions about scenario analysis, throw them in. If I know the answer, I can help. I've got time to do that. I'll answer that live. If not, we can respond to it in the email that follows up after this session, or that might be a good scenario that I take into part 3. So feel free to kind of throw that out there into the Q&A. What do you want to see in that scenario analysis along the way? And then we can figure out either if we're going to address it today, address it in the follow-up email, or in a whole second session where I'm going to be going in and showing you some different examples here. Part 4 to this is really going to be after we've done some work, doing some of the projections and scenario analysis, or doing some of the planning, tax ideas for our clients in the year. How do we then maybe communicate that to the CPA through a tax letter? How do we help prepare for 2026 or multiple years into the future? Or how do we then at least just help our clients remember or keep track of some of the things that we've done or talked about? So that'll be in kind of the final part of this series here. So a little bit of a recap, what we talked about, why it makes sense to kind of prepare ultimately for getting into these tax planning conversations. So getting your hands on a lot of the really good data. So in that first session, I've got the YouTube link down here at the bottom on my slide deck. What types of things you're going to ask your clients for in preparation? What are you going to get together ahead of that meeting? So I've got some different checklists, setting up Holistiplan, getting your clients in there. If you haven't already, you can typically link your CRM system into Holistiplan, or start to kind of upload those prior year returns or sync those in so that you have all of those ready to go for your tax planning season. Planning for those reviews, and then kind of building some internal staging. So I've got that on there. I wanted to make a quick note before we get into scenario analysis too. All of our clients carry different beliefs or biases or preferences about taxes. And I think it's also really important. I realized I didn't mention this in our first session, but as you're gathering all of the data, all of the numbers, you're looking at the prior year tax return, you're looking at their year-to-date income information and expected income through the end of the year, you're looking at what they've withheld from payroll or other sources, or paid in estimated taxes. You're kind of looking at all of that data. But what I wanted to mention too is gathering an understanding from your client about how they feel about their taxes. I think there's an emotional component to every single topic that we hit. And we seem to kind of get that often when it comes to, cash flow crunches or windfalls or estate planning. We kind of immediately get the emotions involved. But I think it's really important to gather a little bit of history from our clients too about how tax return filing has gone in the past and how they felt about it. So especially if they're a new client, just getting a little bit of a history around, have you previously prepared your returns? Have you had a CPA? Have you had an advisor who has proactively done some tax planning? What went well? What didn't go well? Have you ever had a surprise tax bill? Have you ever been audited? What are some things that have occurred in your history, and how did you feel about that, or what are your beliefs? And so understanding some of those beliefs will help you to understand, what are we trying to aim for? So when I'm building a scenario analysis or a projection of the current year, or maybe the next year, I want to know when I get to the end at the bottom and it tells me what that client might receive as a refund, or what they might owe for that year, I kind of want to already know how they're going to feel about that number. So we'll have clients that just every year have to write a check for $30,000, and that's just normal to them. And we'll have clients that if they owe $1,000, they will freak out, right? So we all have those clients that when you say a lot, that number of a lot means a different thing to different people, as well as, we'll have clients too that are used to overpaying throughout the year and like getting a refund. So emotionally, some will say, this is my vacation fund, whatever my tax return refund looks like, that's really what I do X, Y, and Z with. And so they see it as a savings vehicle. Now, whether or not we feel that a $30,000 check is a lot or a $1,000 check is a lot to pay, or if our refund should go towards a vacation, we can carry our own beliefs and biases about those types of feelings about taxes. But that's something just to really understand about your client, so that as you're kind of working through that, you want to know what you're solving for. Like, are you maybe thinking that they want to get as close to safe harbor numbers as possible, but maybe not overpay throughout the year? Are they liking to get that kind of refund back? Do they like to get as close to the pin as possible? Do they like to have more of a neutral April 15th kind of an event? I think that's really important to know about our clients before we get into scenario analysis, before we start to say, like, oh, that's not so bad about owing a few $1,000s, when maybe to them that meant, not only do I not go on vacation, but now I have to write a check and take this out of savings. Like, this sucks. So I think that's something that I really meant to cover in that first session that I wanted to make sure I talk about today, because I think that's super important to understand. What are we going to do today? So I'm going to spend most of our time here in scenario analysis, which is a tool inside of Holistiplan. I think today we have a mixture of people who are, Holistiplan users. And as a user, you may use kind of the standard tax report type of tool. You may have gone into scenario analysis, so this may be new for you. But I also know we have brand new users that are maybe not already on Holistiplan. So I'm going to kind of speak to both sides of that too. I want to go into some kind of real client strategies. For some reason, if you don't have a client strategy, maybe you're just starting out, or starting to kind of look at this and you don't want to use your client data, for example. There are some sample tax returns that are available in Holistiplan. So if you are logged in, you can grab some sample tax returns, upload them, and play with that data. So if for some reason you just don't want to sync your client tax return data in there or plug anybody in, that's something that you could potentially play with. And I'm going to actually use a couple of those scenarios today, as well as kind of one that's modeled off of one of my clients. There's multiple scenarios that you can create, so I'm going to show you how to do that today. I'll show you where to find some of the hints and tips. So that's one thing I really like about the Holistiplan tools, is that there's often like a little circle with a question mark in it, or a little like yield sign, or something off to the side. So if you kind of don't know what you're doing, just kind of look around a little bit and just see, is there a little calculator button is one of them, or is there a little yield sign or question mark, or is there something over to the side on either side? So I'm going to show you kind of where I go on some of those to remind myself, like, what goes into this calculation, what goes into this box. There's a lot of help that's out there too. And then if you're really, really stuck, you can always schedule some time to talk to somebody directly at Holistiplan that can support you through that input or that question. So I'll talk to you about how I kind of talk through and present the results to my clients in meetings. So I do take them directly into the scenario analysis tool in Holistiplan. I feel just in general with financial planning projections of any kind, whether it's your tax projection or retirement projection, I tend to like to kind of show what's going into it. So if we're going to kind of go into this like cooking analysis, some people don't care and they just want what's on their plate, but I like to know kind of what goes into it. And I like to share that with people too, so they can believe and feel that the numbers might be a little bit more accurate. So I take a few extra minutes, even in financial planning, to say, these are the inputs. Let's walk through what went into this analysis. This is the information I'm plugging in about income and expenses and your goals, and kind of get that kind of nodding, like agreement. Yep. These are the assumptions you're using. This is the data that you're using. And so I like to do that with clients as well in scenario analysis, because I feel like it's a lot easier to show them those numbers than to say, oh, looks like you might owe a similar amount this year than last year. It just puts a little bit more thought into it. So just kind of show you how I do that. And then I also love to save any of those wins for, I like to post on LinkedIn, so LinkedIn content, but it's not just to get likes and impressions on LinkedIn. LinkedIn is also where I like to put out some client stories about how do advisors work with clients. So what are some real world types of problems that we solve? And maybe taking a client from a state of upset, confusion, misunderstanding down into clarity. And then we use that in our newsletters as well. So we'll often take our LinkedIn content and then create a newsletter just to show current clients and prospective clients, these are things we do all day. So here's a client scenario. Here's how we solved this one particular problem. So saving those wins, and at the client level, I also like to, in our CRM system, just save any wins that we have there as well. So that could be saying, hey, we looked at this whole projection and we saved them X tax dollars, or we helped them to get to a place of owing a $30,000 tax bill to withholding enough throughout the year and just being happier. Because that's a measurement, right? We all know, everyone on this call knows that whether you pay that $30,000 throughout the year or you pay it kind of at the end, so long as you're not hitting any underpayment penalties, it's kind of the same thing. It's like now or later, 6 of one, half a dozen of the other. But client satisfaction matters. Client happiness matters, right? So if they're going to be happier, just kind of paying their taxes as they go, and they're just having that like moment at tax filing saying, okay, no surprises, we're good, or no big check, we're good. Just being able to say we kind of moved into that position of withholding enough throughout the year and getting to this point, or doing a Roth conversion, which might be something that we're going to model in this tool, and saying, yes, this is to save future tax dollars. And we communicated that to the client during the meeting of, we're aiming to save future IRMA, Medicare premium surcharges. We're aiming to reduce their total lifetime taxes. We're aiming to fill up this tax bracket because they're in a lower tax bracket this year. And so just being able to kind of show that in our notes so we can kind of remind ourselves kind of the work that we're doing and why, and the explanations that we've given to clients along the way. Final reminder here, this is eligible for CFP CE. So make sure if you didn't when you were registering, put that in. If that's something that applies to you, this is something that we try to add onto some of these webinars here as well. Okay, so I am going to get out of here so I can take you into, who do I want to pick first? Okay, so when you are in Holistiplan, the dashboard looks a little bit different. I love the upgrade here in this last year. Once you get into a household, you're going to see kind of your household details and information. So your client's name and information is built into here. And really the first start with anything on the tax planning side in Holistiplan is really uploading a return. So ahead of this, I uploaded this return. This is one of the sample returns that is available. So under tools and resources, you have sample uploads right here. So this is something that you can kind of pull a similar scenario, either if you wanted to follow along to a webinar like today, or if you wanted to just play with some data that might not be your clients, if you're on a trial or kind of an early basis here. So when you upload the return, what you're going to see are the different types of areas or reports that you can get into. So you can pull the actual return up if you wanted to look at that again, if you want to kind of double check anything. Tax report. So this is really kind of my kind of entree into Holistiplan, was really being able to say, how do I make a really easy to read report about my client's return and be able to educate them about their tax level, how much room is left on the bracket. So this is really just a, what did it look like? So this is for prepared returns that are already done. How do we understand the data that's in there? But where we're going to spend our time today is, this is my favorite tool. And I think this is the biggest kind of piece that sets the Holistiplan tax planning module apart, is being able to kind of play with the numbers in a better way. So scenario analysis, you can get into it here. If you have multiple years worth of returns, you'll have a 2022, 2023, 2024 return. You can go into any of the reports or scenario analysis off of those. Or you can go here. So scenario analyses here, will list just the different ones. Once you upload a return for a client, it will automatically start a scenario analysis for you. So you will have something here automatically. I didn't do anything to create this scenario here. You can rename it. So you can go in here and kind of label it however you want to. So especially if you decided you wanted to create multiple scenarios, I usually do it in the tool once I'm there, but if you wanted to, you can ultimately create more. You can also create an analysis if you don't have a return. It's just a lot easier to do so if you do. And I'll show you why. So I'm going to go into this scenario here. So actually, I'm going to get rid of this guy. Delete scenario. So when you first get into this client, what it's going to have is the return, the prior year return loaded into scenario one. So this automatically happened. Scenario one is tax year 2024, and all this information came off of the return information. So this is something that I do like to explain to clients when I go into here, is to walk them through some of the information that got pulled up. So again, kind of sharing, where did this information come from? How did we get there with some of those numbers? You can, if there's a specific section that you're looking to get to, you can jump to section. You can kind of jump down to the withholding calculators or other tools that are in here. Or you can expand all sections, because you'll see that there are some areas that are automatically opened up. You can see that they're already open. There are some areas that have a plus sign here that you want to maybe expand if it's relevant. So if you have a foreign earned income exclusion, then you might want to kind of open this guy up and kind of look at any of the detail in here. We know that this particular case does not have anything like that. So there are going to be some areas here. So you might, especially if you're new to the tool and you don't know what's kind of contained here, you might want to expand all of the sections just to kind of see what are all the different areas. It tends to kind of mostly follow the tax return order. So once you kind of get into the kind of the 1040, it kind of generally follows down the order of the tax return. There's going to be a few areas that are kind of be split out, and I'll show with you what some of those are. But you've got your 2024 scenario. So what I'm wanting to do is this client, if we're going to be doing a projection or look at what their 2025 return might look like, we want to add a scenario here. And so it saves a lot of time to copy off of a scenario. So again, you don't have to have a scenario baked in here, but if you're already copying from a scenario, if you have a similar kind of one year to the next, that's going to be a lot easier to kind of get yourself going there. So I'm going to copy from a scenario, and right here, all I have is the scenario one so far. So I'm going to copy tax year 2024, hit OK. And I'm going to go into scenario two, and I want to label it here. So I might want to go in and call it 2025 projection, something like that. And I'll tell you what, there's going to be some cases where I have multiple projections if I'm modeling some different ideas. So first thing that we want to do here is change the year. So 2025, and then we want to change kind of what are they calculating this off of. There's really not any reason to change this now. It used to be before we had OBBBA. It was, whether or not you wanted to project forward into future years, whether or not we'd have a TCJA sunset, with or without. Those still are in here, but ultimately current law is going to be current law, OBBBA. So this right here, already, this will say 2024 because it's copied over. You want to change it to 2025. So it'll adjust the brackets and any rules that have changed this year. Current law, it also gives you the opportunity that if you wanted to, you don't have to go in order. So if for some reason you wanted to just skip ahead and go to 2026, you can. And then there's going to be an inflation assumption here off of, what the brackets might go up by. So some of the different tax brackets, IRMA brackets, some of the different assumptions that are built in here as well. So it'll inflate the tax brackets, standard deduction. It'll make some assumptions here about some of the different metrics here. So that's really the only thing from an inflation perspective. It's not going to inflate the income or expenses or amount of the deductions other than just those thresholds that are kind of baked into tax law. So go into here. This is something you can check if somebody is really kind of nearing or at 65 or older. It's just kind of inflating some of those magi thresholds. I'll show you where those are, but it's inflating those into the future. So this is really a lot more relevant if you're going to be having a 2025, 26, 27 projection, and then in 2027, having that impact from IRMA. So going down here, you'll want to check a few things. Holistiplan will often give you a little bit of an alert here. So I didn't put in a date of birth for this potential client. So it's just saying, hey, we don't know. But you can go in here and say, yes, they're 65 or they're not. They're blind or they're not. But this is another reason you can use scenario analysis, is to maybe look at what the impact of different filing decisions might be. So maybe somebody, I had a client just a week ago. She is retirement age. She said, should I get married to my partner? We live together. And we talked about all of the kind of pros and cons of that decision from Social Security perspective, from just estate planning perspective, all of those pieces, but also being able to, this is something then you can model and say, okay, if you had a tax year like this year, or if you wanted to run down to the courthouse before the end of the year, what does your scenario look like single? And we can create a married filing jointly kind of scenario for you. Or if we're looking at a scenario where somebody's spouse has passed, we can look at what it might look like if they're a qualifying surviving spouse. So how does that look versus after you kind of have that widow or widower penalty after that point and you move on to single bracket. So how does that kind of look? How does that play into their return? Also, this is kind of important too. So if they're married separate, but living together, there's a couple gotchas there. So you want to check that box if that's the case. So if you have a client who's saying, hey, what does it look like if we do married filing jointly versus single? If they're living together, there's really not a single scenario. It's kind of the married filing separately and, living together if they are, because it does impact a few things there. So you want to then double check dependent. So that's something where, do you have anybody rolling off or being added? So did they have a kid? Do they have one that aged out as a dependent? You want to just double check that information here. So now we're kind of getting into the data on the 1040. So in the previous session, we talked about gathering all of that income information from your client. So you have different income sections on the tax return. So this is really looking at wage income from employment. And just a quick reminder that when you go to look at a W-2 wages, those already often have like 401k taken out. So you want to, if you're going to be playing around with these scenarios and saying, okay, if they increase their 401k contribution or if they make more, you just want to make sure you're kind of taking into account. So you can go through, you might want to then just go through a worksheet, true gross wages, maybe any additional income. So there's some 2 new income source areas here with overtime and tip income. So if you want to split that out a little bit here, that'll be useful later. You can go ahead and put in any contributions, deductions, RSU, non-qualified income, non-qualified stock option exercise. Potentially you can put that income that would be attributed to that. So you can go ahead and plug all of that in, and then you want to make sure there's maybe not a number in here. So if you've been playing around with Medicare wages, you want to make sure that matches up with kind of the true gross income here. So income information. So if you don't know, so let's say you're kind of preparing for that meeting and guess what? Your client didn't upload their year-to-date pay statement, or maybe you don't know what their earnings and deductions have looked like this year off of their paycheck. You can maybe just go in here. I will just maybe say maybe they've received another 2 or 3% in income, and I might just do a quick calculation for that. But that's something that when I'm walking through this with clients, I'll just kind of verify. Hey, we're kind of assuming that you made about the same or maybe a little bit more, tell me a little bit more about your income this year if we didn't see a pay stub, or just to kind of remind clients to get that information together. Okay. So when you have other things that are in here, so what will often copy over as well is your interest income. So dividends and interest are some things that I will often just kind of copy over when I get a return in here. And then I'll ask the client if they expect any significant changes to it. So if we're kind of investing their money for them, if we worked with them last year and this year, if we know that their balances haven't changed significantly in savings accounts, I'll likely just map that over as a very similar kind of number. Or if we know that it's going to be significantly higher, we will plug that in too. So there have been plenty of cases where a client has had $200,000, $300,000 sitting in their checking account, earning almost nothing. And if for most of the year we've gotten that into a money market or got that invested, then we do want to kind of go in here and say, okay, taxable interest is probably higher or lower, depending on what you're potentially doing. Or maybe you spent down a bunch of money that was in a money market earning interest to buy a house. So there are things that maybe that you know about your client that have occurred throughout the year, but very often, if you know that things aren't substantially different, I just kind of copy that over or let the system copy it over. This is other section here where you can go ahead and enter any IRA distribution. So this is kind of that reminder to yourself, like, okay, did they inherit an IRA? Are they now having to take annual required minimum distributions from an inherited IRA for non-spouse? That's something that's a little bit different. We didn't necessarily have to the prior couple of years for people on the 10-year rule. So I kind of go down line by line and say, okay, is there anything new or different? So do they have any new income sources from pension or annuity if they started that? So really good time to run this for your clients are if you know that they're retiring and their income's going to change significantly. So just have somebody say, I'm really confused. We need to add all the information. I thought the data was pulled over from their tax returns. Please respond. Yes, I can. So Felicia, this is all copied over from the tax return. So if I kind of scroll down quickly here, you can see that it's just assuming that 2025 is identical to 2024. But we know that very often the information is not the same year over year. So the things that we want to maybe check or add are related to the differences from the prior year to the current year. So exactly like if there's no change, I don't need to input anything related to interest. This was already here. I didn't need to input their wage information. This was already here. But if it's different, we want to change it, right? In this new scenario. So same thing with just checking yourself on, were there any new distributions, any new pensions, any new annuities? This is something you can check and do this with the client too, just to say, hey, I don't think there are any other distributions here, but clients forget their own data. I've said this on a presentation before. I forgot, I forget like what my eyeglass prescription looks like. And I forgot like which eye has worse prescription. I forget stuff about myself all the time that should be important, that I should know, that horrifies my eye doctor. But there's things like that you want to just double check to say, hey, is there anything maybe outside of what we know or what we do for you or what might be different from the prior year? So we may not know everything. If there was maybe an inherited IRA, what they took out. Same thing with Social Security. So this is if this person was kind of over the age, over Social Security age, taking Social Security income, this will calculate for you what the taxable amount is of that. So you want to go ahead and put in the Social Security benefits, the total benefits received, any withholding off of that Social Security. If that's not something that's mapped over, if that's new for that client, you want to add that in, and then it will calculate for you what amount of that income is taxable. Okay. So gains information. So these are all, every time you see this pencil guy right here, this is information that you can click and open up and edit, because we know that there are different types of capital gains. So you can take a look here and enter this in. So this is something that I do in preparation of these meetings with clients. This is something that's often very different year to year, unlike W-2 wages or interest or dividends. This is going to be maybe a bigger swing if there's been more activity in a year. A lot of my clients are mid-career tech professionals, so I want to ask them if they have RSU shares, ESPP shares, something that they might hold in their kind of employer stock plan holding account that maybe I don't know about, or if they have a fun side account or crypto account on a wallet. What are some capital gains that they might have? And so I will tell them, I've input what I know here and maybe what they've shared with me ahead, because we'll ask for that information. But is there anything else you can think of? Have you had sales in other accounts that maybe we want to include here? So if you have maybe a carry forward loss, you want to put that in as a negative. So if we know that there's something maybe that came off of a return. And the reason that doesn't carry over kind of scenario to scenario is because you don't have to do these in order. So they don't want to just assume that if you do one 3 years into the future that you have that same carry forward, because you've at least kind of chipped $3,000 off of it against ordinary income. So you want to kind of re-enter that. If you know that there's a carry forward loss, you'll go ahead and enter any gains information you know and ask the client to do that. There's also, I love this feature here about adding notes and calculations. So if you might want to say here, I've got some of it, but I don't have everything. I might just say here, this came off of the Schwab account and that was 5,000, add a calculation row, Fidelity, that's another 5,000. So that way, if I'm kind of going in with a draft of this put together with my client, then I might be able to, I don't have to then say, well, where did that $10,000 come from? And this little triangle guy reminds you that you've made some notes and you have some calculation rows as well. So you can go in and say, okay, I've got a lot of the information here, but I need more from the client. Hey, I know about these two, but tell me about that Coinbase account, for example, and then kind of plug that in here as well. So it's also incredibly useful too, because right now the year is not done yet. So as of this recording, it is October 22nd. And you might know if you're managing the investments for this client, you might know that you don't plan to create any bigger gains or losses this year, but we also don't know what's in store. So I will also just make myself a note here of when I kind of went in and plugged this in. And then I have a note in my CRM system for clients that are particularly sensitive to kind of go in again and look after the close of the year if there's any significant difference to gains or losses. So that's also why I like to do this exercise towards the end of the year, because there's a little bit more certainty around income, around capital gains or losses, around activity expected before the end of the year. So this is really like, this is the season, 'tis the season to do scenario analysis, because we have a lot of good data and information about the year, and it can help us to make decisions about contributions or Roth conversions or other decisions that you might want to make before year end. So there's other kind of income fields here as well. So if they have, the nice thing is if they have kind of Schedule C or Schedule E or Schedule F income, that will show up on the return, and you can kind of ask, is this about the same? Or if this is new, you can kind of get into a worksheet and create a new entity for that client. So you can gather a little bit of information about any entities that might be new, but any existing entities will map over. So you can go in and edit the information related to that Schedule C, E, or F income, or other income sources that they might have coming in to the picture. They have a lot of boxes here. So you can go in here and say, okay, maybe I need to jog my memory and my client's memory about anything that maybe happened this year. So, prizes and awards, for example. So they probably remembered that if it's significant, but jury duty pay, some other areas here that you might want to put in, scholarship income that's taxable, other types of income sources. So this is something that you might want to just open up briefly and say, is there any other income sources that you can think of that maybe occurred earlier in the year that maybe we don't have listed here for you? Those are all things. So if you see this little pencil guy, it doesn't hurt to just open this up, especially if this is new for you, to just kind of explore what goes into some of the data and information. So especially if you have a client, you probably don't have it unless you work with a lot of clients with Schedule F income. The first time you see one, make sure you open it up and take a look, right? And see what's kind of included in here and get familiar with that example. So Felicia just asked, how do you put in a loss? So you just put a negative. So if you're typing on your computer, you're just gonna do the minus sign there, and it'll automatically make this guy a loss. So then it will treat this as a loss here. So short-term capital loss here. So if we did some loss harvesting, but we had some gains on the books, but kind of their total capital gains are 8,000, you can plug that in. But if this was more significant, so let's say $20,000, not that there's been an opportunity here to do that as of lately, but then it will show here the total capital loss, but it'll limit it. And it'll tell you here that it's not applied to future scenarios. So this is something that you want to map forward if you're going to do multiple years, and then kind of include that additional loss carry forward that's going to be in here as well. Okay. All right. So Schedule 1 income is in here. We just talked about that. Other gains and losses. So if any of these things apply, you can play with those numbers. everything here that you see is a line that you can add information into, and then you can kind of click on that to see if there's additional boxes that are useful or that you can do as well. Okay, that doesn't apply to a lot. I'm going to close that guy out. So above the line deduction, so this is something that you can also play with and plug in. So if they're putting HSA contributions in through payroll, that's already going to be included and kind of netted out of that box one income up at the top. But this is if they're going to make kind of a contribution out of their checking account, for example. You want to put that in. This is another area. So again, when you see this little sticky note guy, this is your opportunity to kind of plug that in to say, they made a contribution to Leela's HSA, this amount. So you can just kind of put that in. And then if you need to do additional amounts, you can. Okay. So there is on here, the self-employed health insurance area as well. So you can go ahead and put in information related to health insurance. If you want to look at subsidies or potentially the clawback of those that are made throughout the year, if they're going to have to repay, those are things that you can potentially calculate in here as well. Other deductions, this is another area that you can open up again and see if there might be something that pertains to your client. In a lot of cases, if they have a lot of funky stuff going on, you're often going to be working with a CPA to do this projection. I would say that I go into scenario analysis for a lot of my clients, but I had a client just this morning, I was emailing with their CPA where they both have W-2 income, they both have consulting income, they have 7 rental properties, they've got some complexities that I could maybe kind of get in here and plug all of this in, but the person who's kind of handling their tax returns and bookkeeping kind of has a lot of that data already. So I kind of shot them a question and said, hey, this is kind of where I kind of think if their year might look similar, we might want to do a Roth conversion for them. How does that look? And so if you find yourself filling in a lot of these boxes, that might be a case where it makes sense to work with a CPA. But this works with most of my clients, like 90-something% of my clients I can take into scenario analysis and have a pretty sharp looking scenario for them. So itemized deductions. So this is kind of an area too. You might have for SALT, you might have $10,000 limit for some of your clients this year. So you might want to go ahead and kind of gather that information again if it's higher. So let's say that's $12,000. You can go ahead and plug in, deductible SALT. It'll then calculate that being higher than the 10 up to that 40 if they're eligible. You can go ahead and plug in their other itemized deductions if so if they had a big medical year, a lot of medical expenses, this is another area where you can go in and add some calculation rows or information related to those medical expenses to see if that makes sense to itemize for this particular year. So you go ahead and plug in anything that's relevant or anything you want to project or think about related to charitable contributions, like a donor advised fund contribution is something that I commonly come in here and play with. So it's just kind of walking through again with the client and saying, here's what I plugged in and why, and what that might look like. And the default is for Holistiplan to calculate the optimal deduction, but you can force it to do a standard deduction, or you can force it to do an itemized deduction. So this is something you can make a choice on, but the default is optimal deduction. And it'll tell you right down here. I mean, you're going to generally know if it's a nice round number, that's the standard deduction. But it'll tell you that it's the standard or itemized here as well. Okay, so let's see here. Just seeing questions. So how do you input rental incomes? Gabriella up here. A little bit higher here. So likely you have an entity related to that, any Schedule C or E income that's going to be coming in. So you'll be able to enter kind of any of those non-wage income sources there under Schedule 1. Okay. This is kind of a newer thing, a couple newer things for this year. If you find this under other deductions in QBI. So this is usually kind of closed. So if you're going to expand that out and just take a look and see car loan interest paid, is that below the line deduction that we want to put in here? The enhanced senior deduction. This is something that will automatically kind of come in here if they are of age, but it'll remind you here. So you do have, this is I think one of the first places that we've seen together, these calculator guides. So that's a little bit different. You've seen some warnings, you've seen some overrides, you've seen some worksheets where you can go ahead and plug in some of those additional charitable deductions that are below the line, the new one that we're allowed to put in here. But the car loan interest paid, this is now a little calculator here to kind of show you, once you've plugged a number in, what that might look like. Same thing with tips, overtime, that's where you're going to find it here as well. All right, so you've got also QBI deduction worksheets in here too, and some override options. Non-refundable tax credit. So these are things like child tax credit is going to be the common one that we see. If there's any non-refundable education credits, those are going to be in here too. So especially if it's mapped over, you just want to confirm. So again, your dependents that you put in the top of the worksheet are going to feed down into here for the child tax credits. So those are some pieces of information that you want to kind of pay attention to if they pertain to your scenario, or just look at some of the warning signs here that might relate. There's also AMT worksheets in here. This is something that I think I'll cover more in depth in the next tool, because that's something that we also want to look at. There might be some things that you might have seen. I think I saw a question on this on capital gains and losses here. So there's kind of a few kind of funky things here, like if your gains and losses were subject to AMT or not, or there's a little bit different AMT worksheet in some cases. You can play with that a little bit as well. Okay, so other taxes. So if they have other self-employment income, church employee, there's kind of, it takes you down the line. I would assume maybe a lot of your clients don't have that type of income or taxes, but the nice thing is if they did on their prior tax return, it'll feed over automatically. So that's kind of one of your clues to kind of look at or ask that type of question. So we kind of get down here into taxes. So this will calculate here based on all of the income, deductions, credits, everything that you've plugged in so far will lead you to a total tax number. If you're kind of wondering where kind of some of this comes from, it will show you the worksheet, and this is line by line on the tax return, what that looks like. So it will show you what your line 25 total tax is minus any credits. In this case, they have credits against that. That really kind of comes up with, well, how did you come up with that 4764? That all gets calculated in here, and then you can see the worksheet for that additional detail and information as well. So here, ordinary incomes are the marginal bracket that they're in currently, as well as the long-term capital gains marginal bracket, and then the effective rate. So all of their total taxes of all types divided into that income to come up with what their actual kind of tax rate is against their income. So there is a calculation in here for FICA just for kind of informational purposes only. So how much kind of total tax are they paying across all of their income from all places? That's just really informational. A couple more things I want to show you in here is there's state modeling. So if your client, lives in North Carolina, so we have state tax return, but a lot of my clients are in Texas or Florida. So you can add a state return in here. Right now, Holistiplan does not read the state tax return, so it will feed the information down from federal. So it will kind of add what they need to add, take what they need to from a state by state level for North Carolina, for example. So generally speaking, this is going to kind of already feed a lot of that information in. There aren't often things that are different on the state tax return that you would need to modify, but you can if you need to. And then it will also give you all the MAGI groups. So for a lot of the different types of deductions or phase outs, there's different MAGI groups. So what is their MAGI for that particular calculation range? So for, the SALT deduction cap, for example, that's a MAGI number that they're looking at, and the calculation that goes into it, you can click on this little question. So does it exclude foreign earned income? Does it not? So group 1, for example, is going to also include housing. So there's different groupings here. So this might be something that's, I would expect might be new to your clients, but your clients that are kind of nearing or at retirement age, this is something that I look at a little bit more frequently too, is MAGI for the purposes of Medicare, Part B and Part D premium increases, or IRMA. So this is something that you can also look at as well. But this kind of feeds in a lot of those phase outs. So you can look at it right as you're looking at the tax return to kind of see what might make sense here. Final thing that you will have to put in manually is any withholding or payments that they've made for taxes along the year. So that does not feed over. It does not assume if they withheld payroll taxes or taxes against payroll last year, it doesn't assume that they're going to do that again this year. So under total withholding, this is an area where you can go ahead and do that. If you know that they've sent in estimated tax payments directly to the IRS or they plan on it, you can go ahead and plug those in. So let's say that they've kind of sent some taxes down. You can go ahead and enter those at federal level and state if they've made estimated taxes at the state level. Your wage withholding for each taxpayer can be entered here as well. But I also wanted to direct you to, if you're inputting all of the information kind of along the way, it will collect that for you. So under the wages worksheet, you're going to have your federal and state withholding as an option here. So if you're going to enter it here, you don't need to enter it again. It's just you want to enter it in one place or the other. It kind of feeds to each other. So if you're entering in the year-to-date payroll information, including, gross wages, any deferrals or deductions, withholdings off of that payroll, you can go ahead and enter it right into this worksheet. Or if in this case, for example, let's say their income was identical year over year, and I didn't really slice and dice this number at all, I can go down here too. And then what I do is just look at their withholdings year to date. So how much have they withheld federally? How much have they withheld at the state level from a tax perspective? And then I just calculate how many paychecks do they have left? And if they're withholding, $100 federal per paycheck, they've got 5 paychecks left. We've got $500 plus what they've withheld year to date, $4,000, we're at $4,500 for the year. So I'll just do kind of some quick math to come up with what will the total withholding be this year off of that. So year to date plus expected withholding through the end of the year. Because one of the purposes of scenario analysis here is to be able to see, should they maybe withhold a little bit more off of their payroll through the end of the year? I just did that personally. I have 5 paychecks left. I did a quick calculation and scenario analysis for my own scenario. And I emailed our HR operations person today and said, I need to bump up my withholdings through the end of the year to kind of get myself where I want to go. And so this gives you the tool to be able to see what that looks like. So let's say they have wage withholding. I'm just going to put in $1,000 here. And I'm going to take out one of these guys. So what you're able to then see is, what is your total withholding across all sources? So did they withhold any withholdings from Social Security benefits? So if you put that into the worksheet above, it would feed down here. Any withholdings that you did during a Roth conversion, on payroll, on a pension, any other types of withholdings that they might have made from different income sources, that will all show in this one place. So where are all the places that you pay taxes from this year and that you expect to pay. Maybe they haven't sent in a Q4 payment yet before January 15th. So this is something where you can maybe model what that might look like and show that total withholding number against. It calculates the total tax for the year, and it calculates that safe harbor number. And it's really just looking at that 90% of total tax number. So this is an area too, where you can maybe educate the client on, what is safe harbor? What are the calculation options for that? The 110% of the prior year or 90% of the current year total tax. That calculation here, the 90% of total tax is calculated here. And so you can kind of see what that withholding looks like. So if any of you are good at math, you know that they're getting a little bit of a refund here. And so that difference is calculated down here for federal. The state withholding calculator, if you've turned on a state scenario, your total withholding, you do the same thing. How much have they withheld from their paychecks so far this year? Are they sending in any estimated tax payments? So let's say they just withheld $2,000 in state taxes off of one of their paychecks. That will show you the total state tax for the year, your total withholding, and it will show here positive number means that they owe. So in this case here, this is a refund, and this is owing taxes at the end of the year. So this might be a case where this person might be surprised by this, and that's talking about withholding additional taxes throughout the end of the year or through the end of the year, or making an estimated tax payment directly in order to reduce that number. So that's kind of one of the uses of scenario analysis, is to be able to just be more predictive of what does the tax year look like? So is there a potential projected refund? Is there a potential projected kind of amount owed? No surprises April 15th. Knowing that information on October 22nd is really powerful to reduce some of those surprises and to be able to model some of the different ideas. So in our next session, we're going to dig in a little bit further. And what I will do is model some of the real kind of case studies of getting in and plugging in a Roth conversion and seeing how that plays out and seeing what maybe estimated tax payment might do to offset the taxes created by Roth conversion, by a scenario that we often look at for people who are charitably inclined, making a donor advised fund contribution or itemizing that year. So looking at what are all the itemized deductions that maybe we can gather, including additional charitable contributions for that year? How does that play out into the tax year? And you can create multiple scenarios. So I'll show you that in the next session, where often when I'm taking a client into this tool, it's just looking at, let's see, what did last year look like? What do we expect this year to look like? You can plug and play, but I also like to create a new scenario to then take that information to use it to say, okay, now that we've got 2025 tuned up, now in a third scenario, we can copy this over and then play with it. So you kind of have one that's already kind of, if we do nothing different, this is where you might end up. This might be kind of plugging in with those additional ideas or techniques, or maybe that's where we add in that additional estimated tax payment, or some of the other ideas like taking some money out of an IRA before year end to kind of fill up a tax bracket. So that's where we're going next. There are one other resource I wanted to point out to you here is the scenario recipes. So if you are in a section and you want a little bit of help of how to enter in some information related to donor advised fund, charity contributions, capital gains section, non-qualifieds, ISOs, RSUs. So some of the equity compensation, businesses, QBI. You can pull one of these up and pick on QBI right now. So this will educate you a little bit more about how QBI works and how to kind of enter some of that information in correctly in the system, kind of get the answer that you're looking for. Same thing with AMT credits, for example. So we've got a lot of great questions here in the chat, and I think that's going to be really helpful to for me to then make sure that the scenarios that I'm going to give you in the third session are going to match what you're most interested in. So in the last couple of minutes, kind of as we wrap up here, if you have kind of any additional ideas or scenarios or things that you run into or problems you want to solve, say, hey, I'd love to see Emily plug a scenario in here that solves X, or this is what I run into. I would say I mostly am looking at what does the tax year look like? No surprises, April 15th. What might estimated quarterly tax payments look like if we make them, or bump up withholding, Roth conversions? What if we sell more of your stock and have capital gains that we're going to, how does that play out this year, and how much more tax might that create? So those are things that I like to take clients into. That's a lot of my client base is trying to solve for those types of scenarios, or I'm moving into this next phase and have different income options, or I have a 10-year rule on my inherited IRA and beyond the required amount. Should I take more out each year? And what does that look like? So I like to model those and then say, here's what this year looks like. We do nothing. Here's what this year looks like if we kind of apply some of these techniques or additional payments. And this is a really powerful tool to help bridge that gap between what we're able to do and what we know about our client, and then where the CPA kind of picks up and does the return filing for them. So 'tis the season. We've got plenty of time before the end of the year to run these for a ton of our clients and really kind of bring a lot of value and impact on the relationship. I promise you it's worthwhile.
Thanks so much, Emily. That was great. Thank you so much for all of your questions. There were quite a few that came through the chat, so Emily and I will take a look at them, the ones we didn't get to after this, and we will include our answers in our follow-up email. We have a coupon code for anyone who is interested in trying Holistiplan who's not already a user. I'm going to copy and paste that in the chat now. It's available for 1 week, and it'll get you a 10% discount on your first year. And you get to start with a free trial. So I am putting that in the chat now. Sorry, talking and typing at the same time is harder than it sounds. All right, so you can use that link that I just sent in the chat to get started with your coupon code. I also have a link that I'm going to copy and paste to register for session 3, which is happening on November 12th. We're super excited about it. That one is called The Secret Sauce, Seasonal Planning Opportunities. So I would love to see all of you there. Again, thank you so much for your time today, Emily. It was incredible. Again, I always learn something. I think that I'm a Holista pro, and then I get on your webinars and I always learn something new. So thank you, Emily. Thank you, everyone, for staying on. Thank you for your time today. And hopefully we will see you at session 3 on November 12th. All right, bye, everyone.